Everybody, and welcome to today's special event to discuss why investing in the best regional Australia property markets makes sense and why now more than ever. I'm Terry Ryder, founder and managing director of hotspotting.com.au, and today my special guest is Mark Heritage from buyers agency Over and Above. Now, Mark and I fundamentally agree on this point, that regional Australia is the unheralded hero of the Australian property market. It should be front and centre of any discussion about real estate growth and where people should buy, but often it's overlooked by mainstream media and by investors who think the best prospects are always found in the big cities. But in fact, in the past 2 years, the strongest markets in the nation in terms of the number of locations delivering strong price growth have been Tasmania and regional Victoria. And in terms of uplift in sales volumes in late 2019 and early 2020, leading markets across Australia included the regional areas of New South Wales, Queensland and Victoria. Now, I often describe buying in good regional areas as a win-win-win scenario. Win one is cheaper prices in the capital cities, win two, higher rental yields, and win three is the potential for strong capital growth if you buy in the right places. Today, we're going to be speaking about that in detail and a whole lot more. And we'd like your participation. So if you have questions or comments, please type them into the chat box panel or the Q&A panel that you should be able to see in front of you on your screen. So let's get into it. Mark Heritage from Over and Above, welcome.
Thanks, Terry. Thanks for having me today.
Probably a good starting point just for people who don't know your business and yourself. Just tell us a little bit about who you are and what you do.
Yeah, cool. Thank you. So we're a buyer's agency. We have a borderless approach to property investing, which helps our clients diversify and execute on their plans. We help them develop those plans and work out a particular strategy that may suit. So what led us to the buyer's agency space, I suppose, Terry, is not a career change or being sick of our jobs, but it was rather more a pathway in representing other people to leverage our skills and our learnings through the multitude of negotiations on our own acquisitions as professional investors. So it places us in a perfect position for helping others create their own pathway. So we're delivering at the moment exceptional results of up to 100% return on investment in the first year with equity and cash flow. And I'll be happy to break that down for people offline. So our methodology is really, really simple. It's all data and statistics driven, which leads us to specific locations, hence why we're here today talking about the regional areas of Australia, supported by on-the-ground due diligence. As we know, it's where the pot of gold at the end of the rainbow can exist, Terry. So, you can't find the gold without intrinsic research and knowledge.
Yeah, and your research and your operation is very much focused on regional Australia. That's obviously a choice you made after research and with experience in the market. So fundamentally, what is it about regional Australia you think that makes it front and centre for you?
Yeah, for us, it's definitely the affordability. We look at where the critical mass of Australians can accumulate wealth. Now, we try and break down the stigma and the years of perception, I suppose, Terry, and look at it. And most people think that you've got to buy in the capital cities. You've got to buy there to experience that growth and, real fortune. Whereas what we're looking at, on the other hand, is that most people can't afford to buy in the cities. Most people don't know the locations within those cities that are going to grow in value as the next stage of the cycle. Plus, the yields in those areas are quite low. So, they're negatively geared in a lot of cases. So we look at what aspects can help people accumulate wealth through investing in property. It's definitely those locations where the entry points are at a low risk level, the good yields, but backed by all those really solid fundamentals and those key drivers. It's, from an employment perspective, infrastructure to those main services and central locations such as the capital cities.
Yeah, I think that's one of the great furphies of real estate investment, isn't it? That a lot of people think that you've got to make a choice between good capital growth or high rental yield, but I think you and I would agree that that's not the case. If you understand what's available in regional Australia, you can actually have both. You can have a great rental yield, so you have a property that's cash flow positive or at least neutral, and also be in an area that's showing really good capital growth.
Yeah, and we've got some perfect, examples of what we're doing in this current market. I'm sure we'll elaborate that on at some stage throughout discussions, but, significant cash flow positive, which is just going to help clients accumulate wealth. And once again, we'll go back through and look at those key areas as to why we're buying in certain locations in regional Australia.
Yeah. And it's often the case, isn't it, that the best regional areas actually often outperform the capital cities on capital growth. And as I mentioned in my introduction, regional Victoria and Tasmania have been a couple of standouts in the last 1 to 2 years in terms of lots of areas with double-digit growth in them median prices. That was happening at a time when throughout most of last year, the two biggest cities in Australia actually had their prices going backwards.
Yeah, and that's what we're seeing ourselves is, up to 9% growth in certain areas in regional Australia. And, you talk about why you'd want to be positioned there and how do you locate those properties in those locations. Well, that's where you need that research and that knowledge to be able to understand, the power of that. And we'll also touch on, cash and offset accounts and what lazy money that is these days, and also the power of equity as well. I'd like to touch on that at some stage.
Okay. And do you also look for those value-adding opportunities? I know from my own personal experience that it's a lot easier to find properties that are not only more affordable and have better rental yields and have the possibility of perhaps, because land sizes tend to be larger than in the central areas of the big cities, that you can perhaps subdivide or add a second dwelling in some form.
Yeah, sure thing. And that's probably our real skill set as a team. We've done over 120 transactions as professional investors ourselves, which really led us into this space of buyers agencies to determine, how difficult it must be for people to start to determine what a feasible project actually is and to make money and execute on that. So it sort of organically led us into the buyers agent space. But getting back to your point, like we primarily look at the cash flow and also the growth projections for an area. And, we love to add that value add strategy in there because that's what can really exponentially grow a portfolio if that's what you're looking to do to accumulate.
Yeah. So perhaps we could start to delve in some of the things that people should look for, because as with any location in real estate, it's not a case that everywhere in regional Australia is a good place to buy because it's cheaper than the big cities. You definitely need to be very targeted on the places that you're going to invest your money. What are some of the things that you look for your customers?
Yeah, we're definitely looking at infrastructure spending. So we're looking at the state, federal and local government, what activity is actually happening. We're also looking at the employment nodes in those areas. What's actually going on from a local economic perspective to drive employment? Is it a one-dimensional economy which highlights the red flag to us, or does it have multiple dimensions? So, there are a couple of key elements. We're also really delving deep into the statistics side of it, Terry, to look at what are the vacancy rates within a particular area and what does that trend look like over a period of time? And then we culminate that into the yield trends over a period of time. Have we got sustained improvement and trends heading upwards, or have we got volatility in that trend line? So it all helps us with those key indicators lead us into a region, and it's all supported by obviously the population growth and supply demand and those other fundamentals. But we're really looking at that, or those elements. And what we're finding is that people are wanting to gravitate to those more secure community type environments to either retire or raise a family. Really that sense of security. And I think we're in that real time at the moment where that's even more paramount and coming to the surface more so in every conversation we have.
Yeah, and we'll touch a little bit later on some of those lifestyle trends that are actually driving greater demand for regional property. One of the points you touched on there, which we at Hotspotting believe to be incredibly important, and that is diversity in the economy. That's one of the starting points for us in deciding a location that we might recommend.
Yeah, absolutely. If we've got, we've had clients come to us who have bought in purely mining towns based on yields. And, ultimately there's been some downturn in those markets and they've suffered. So we've diversification is, paramount for us, even in property investing, is that if we are building a portfolio, we're looking at these key regional areas that will time their markets at different stages. But if we've got that long-term sustained growth in the different markets, that's the most secure form for setting them up to succeed long-term, is to be able to buy in those diverse locations.
Yeah. Now, we've touched very early in this discussion about the affordability of regional Australia, that being one of the great attractions for home buyers and investors. And Tobias is asking the question, how much money do I need to invest in regional Australia? And I know it's a broad question, but there is a fairly general answer I think you can give to that.
Yeah, look, did you want to elaborate on that, Terry, or did you want me to touch on what we've just been able to sort of achieve recently?
Well, just to give us some broad brush figures, I think Tobias is asking, do I need to spend $500,000 or can I spend 200 or 300,000 to get a good investment in regional Australia?
Yeah, and we can look at a couple of recent acquisitions that we've made between that sort of 220 and 275 range, or 278 actually, specifically, and significant cash flow positive. We're looking at anywhere between 3,000 to 6,500 net positive cash flow year one alone, with growth projections in those areas ranging between 7 and 9.5% year one alone. So, for clients entering into those types of transactions, Terry, and setting them up on a 90% lens on an interest-only level, so requiring 10% deposit, plus your stamp duty, plus your buyer's agent fees, plus your inspection reports and legals, etc. Now, our clients are requiring anywhere between $48,000 and $60,000 roughly as an entry point, of either cash, lazy cash, or lazy cash sitting in offset accounts, or equity required to enter those transactions. So, for $220,000, our clients achieving $300 a week rental return on that. So it's a fantastic outcome.
Yeah. Ryan is asking the question, in buying in regional areas, how do I inspect the property remotely? And for me, the obvious answer, and one that I've used frequently, is to engage a really good buyer's agent to do that kind of thing for me.
Yeah, and that's paramount for all our clients, because, who engage us are the guys that are time poor, the families that don't know what they're doing, don't know where they should be buying. So they're actually acknowledging their deficiencies to not try and get it right every time. So they're realizing that they need to equip themselves with the right team on their side. So we're conducting all that research and due diligence on the ground, analysing the building and pest inspection reports on behalf of the client, sharing that information, making sure they fully comprehend, the minor deficiencies with the property, or if there are any major, I suppose, non-conformance items, so we can go back and renegotiate or exit the contract.
Yeah. Yeah, we've touched on some of the broad growth drivers to look for in regional areas. Are there some early signals that might trigger you to show a greater interest in a particular area? Because there's lots of good ones out there. I think regional Australia is full of interesting and worthy places to at least consider. But are there particular signals or early signs that you look for that signals a place to be an investable location?
Yeah, we always, go back to the trends, we're always looking at the vacancy rates. Are they headed in the right direction? The rental yield, are they trending upwards? But going back further than that, I suppose, we're looking at the population growth forecast and what's the construction pipeline look in that particular area. And that's culminating into, is there going to be too much supply versus demand now and into the future? So we're really looking at those projections. So working with local councils and getting a clear understanding as to where they're looking to take their suburb into the future. What are they investing in right now, and where do they also see the shortfalls? And once again, it gets down to your research and analysis, and then your number crunching and reviewing your data.
Yeah, you touched there on vacancy rates as a key factor, and media tends to regularly report the vacancy rates in the 8 capital cities, and in most cases they're quite low. They're all currently under 3%, but many of them are under 2%. But what never gets reported is the vacancy rates for regional Australia. In many cases, they are ultra low. It's not uncommon to find that vacancy rates, generally speaking, in some of the key regional centres are below 1% at the moment.
Yeah, huge amount. And that's one of the key drivers for us, is that we're not looking at any area over 1.5%. And a lot of the areas we are in at the moment are as low as 0.3%. So, the likelihood of the property remaining vacant is extremely low risk for any investor. And I think we're going to touch on one of our key regional areas, Terry, and we're talking about this off air. And even if it tripled in vacancy rate, it still meets and would be better than the most areas of Australia to invest in.
Well, that's right. I mean, one of the key questions for people is that with so many people who previously had their properties in short-term rentals like Airbnb are now putting them into the longer-term residential rental pool. And what does that do to vacancies? Well, I think the key point is if your vacancy rate currently is 0.8% or 1%, you can actually absorb a lot of that and still have an acceptable vacancy rate.
Yeah, extremely low risk. Yeah.
Yeah. Okay. We've got a lot of questions coming in already, and it might be a good time to talk about perhaps a case study, a typical location that illustrates some of the points we're making. And Andrew asked, I wouldn't mind a commentary on a specific location, for example, Warrnambool, which he's come across recently. And that's one of the ones that I know that you have a particular focus on. What do you like about Warrnambool?
Yeah, it's one of the areas that we've sort of started to look into, Terry. And I think the number one thing from our perspective with Warrnambool is the amount of infrastructure spending, but the diverse economy once again. And I think once again we touched on this offline, but the broad range of industry that's driving employment and sustainability within the economy. Yeah. And that's a real attractive element for us when we're leading clients into a particular area, looking for growth, looking for good cash flow, but also once again we apply the strategy of value add to grow a portfolio. Each should form the basis of most investment portfolios as a diverse opportunity or area for consideration for sure. Yeah.
So Warrnambool, for those people who aren't particularly familiar with us in the west of Victoria, about 260 k's from Melbourne. One of the things I like about it, and it's particularly pertinent to the current situation, is the diversity of the economy there. It certainly has a tourism industry, and that's the sort of industry that currently does take a bit of a hit in the current circumstances, but it also has very strong sectors in the sorts of industries that are going to be very strong in the current climate, including a very strong health sector, a strong education sector, a lot of agricultural activity in the general area which goes through Warrnambool, construction, manufacturing, and it's a big area for wind farm development, and alternative energy is one of those areas that is continuing to pump strongly right now and not being adversely affected by the current circumstances. So that all stands a place like Warrnambool in really good stead to be resilient in the current climate and to recover strongly out the other side.
Yeah, definitely plenty of lifestyle features there, Terry, as you mentioned. Yeah. Transport infrastructure, it's really for the stays, isn't it?
Yeah, and the standout feature, we've touched a couple of times on vacancies, but the current vacancy rate for Warrnambool is 0.8%. So in terms of the possibility of more rental coming into that market, it can actually sustain quite a large increase in the number of rental properties and still have a very acceptable vacancy rate that's not going to lead to a reduction in rentals. So what are some of the other features of that market? Mark, I note that it's projected to continue to be a very strong population growth area. Currently, population about 35,000, but projected to reach more than 50,000 in the next, say, 15 years. The other factor that stands out about Warrnambool, it actually was awarded in a recent study, the #1 region in Australia for livability. That's quite a feather in its cap as well.
Extremely low unemployment there too, Terry. That's probably one of the other key metrics we look at, and I think that leads and talks back to that diversity of economy, and not just being the 1 or 2 or 3 trick pony. It's got so many elements to it. Several projects underway there through as well. Waterfront there in Warrnambool. $100 million transformation over the next 8 years there on Hopkins River. There's so many elements to Warrnambool that leads us to sort of feel that that's definitely an area. And you touched on the wind farm, $2 billion, and but unemployment's so low, vacancy rate's extremely low, and so affordable.
Yeah, and that's all part of the livability factor that helped the location of Wollongong to be awarded. It was a study by market researchers, IPSOS, examined locations right across Australia, 16 lifestyle influences, and Wollongong was the only region to score above average in all 16 categories, which included medical facilities, safety, education, housing, natural environment, etc. One of the things that also stands out for me, Mark, about Wollongong is that infrastructure spending is a big factor. There's a major upgrade of the rail line from Geelong to Wollongong in planning and approved, and also a major upgrade to the Princess Highway between Wollongong and Port Fairies. These are projects that are costing the hundreds of millions of dollars, and these all have a big impact on residential property markets.
And even the community field, Terry, like you look at it, and around $20 million for a new library in Warrnambool. So yeah, they're all key. We talk about the secure element of wanting to be in a regional area and feel that comfort and security. Well, libraries are a key area for that.
Yeah, we also touched on the wind farm industry, which is a big factor in that part of Western Victoria. There are 5 big ones on the books, 3 of them under construction right now, and a couple of others in planning. But the total investment of those 5 wind farm projects in the Warrnambool area is about $2 billion. So it's quite substantial, and you can imagine the sorts of economic activity that would generate and the number of jobs it would create.
Yeah, absolutely. You look at manufacturing, retail, health. Heavily proportioned to that from an employment perspective.
Yeah. Just a question coming from Nick, and this is really a question about your business, and it is asking about your coverage in terms of what areas of Australia you cover with what services that you provide.
Yeah, it's a great question. So we have a borderless approach. So effectively, we're covering all areas of Australia. We don't have a predominant focus in Western Australia at the moment for investment, but and also Northern Territory, with all the other major states where we're active and buying for clients in the right markets. Once again, key metrics will take us to certain areas within suburbs to determine what is investable, and we're really highlighting and identifying those the pot of gold at the end of the rainbow, which is what we're striving for every client.
Yeah. And we've got one of the registrants just asking another general question about how you go about researching areas and determining what infrastructure spending is happening. What is it that alerts you and puts a location on the radar screen?
Yeah, I suppose it's more so is there any federal money going into a particular area? Because that's what gives us the greatest level of confidence that that's where they're wanting to drive people. We're looking at an influx of 400,000 people into Australia every year. Now, this year may be slightly different with the current situation, but moving forward over the next 5 years, we know that we haven't got enough supply of residential real estate to support the influx. So what we've got to look at is, well, where's the government spending their money? And then at a state level, what's being injected from that perspective? And then obviously it flows down to local government. So we're always looking at the construction pipeline, where the money's going, as key indicators to us to drive us to particular locations, to make them investable regional locations, and then supported by on-the-ground research and knowledge. And that's a whole new gamut, I suppose, where we're working closely on the ground with local experts, from council to agents to professionals such as solicitors, accountants, etc., to see what they're seeing in the marketplace. So really the key component to that is being able to build relationships with those key council identities, the town planners, these sorts of people that can give us the information we need to support, I suppose, the data and statistics that we have.
And Aaron's asking the question, again, quite a general one, but what kind of demographic factors do you normally find in these regional areas, and how sensitive are they to the current economy and the current economic risks?
Yeah, and that's another great question, another factor for consideration. And, we're not looking to put our clients in an area where we have I suppose, government housing any more than sort of 15%. So that's a number for us that we use as an indicator. So we're doing our thorough research on, breaking it down. And this is where, people often come to our events recently, Terry, and, we conducted those in Queensland and around Victoria. And, we did our follow-up with clients, and they sort of mentioned, we heard Bendigo was raised. So they went and bought in Bendigo, and then what's ultimately happened from there, they've got back on the phone and said, oh, we've got a problem. And we think we've bought in the wrong location in Bendigo. We don't think we've bought in the right location. So it's about, really being able to break it down and not just taking, Warrnambool as the area that everyone should flood to right now. It's about intrinsically knowing with the research and the knowledge to understand the key pockets within those regional areas.
And that speaks to one of the talking points that you and I discussed we wanted to touch on before when we were planning this event, and that's the factors to seek at a micro level within a suburb. You've just really touched on the point. It's not just a case of finding a good regional city and going and buying there. You really have to buy in the right location and a location that ticks the fundamental boxes.
Yeah, it's the location supported by your unique strategy, and everyone's unique strategy will be exactly that. So, Terry may come to me as a client and suggest, Mark, which he wouldn't, but if he did, he'd be suggesting that this is my scope, Mark. I want a value add property where I can potentially subdivide, but I also want to renovate the existing dwelling because I have the skill set to do so, or the team behind me to do so. And that's going to increase my cash flow, but also my equity position. So it's a value add proposition. So it's the pockets of opportunity based on a particular scope for a client. It's not just a generic, Bendigo 3-bed, 1-bath, brick construction. It goes a little deeper than that.
Yeah. There's a question here from Thomas, and I think it's an interesting one, and it's one that I've heard debated. Different analysts have different views. I'm interested to hear your view. He's asking, what's the minimum population that you believe a regional town should have before it's one that you should consider putting your money into?
Yeah, that's a great question, Thomas. I look at an area, Terry, and I lived in Echuca in the northern part of Victoria for many years, and I really, really do like that from a lifestyle perspective. Tourism's strong there at the moment, yeah, but lots of other industry, and I like that area. And I suppose the key point there is that I looked at it as an investor many, many years ago, and I thought, well, the population's 8,000, you include Moama on a broader scale, brings it to about 15. But what I'd be looking at is a minimum, of around that sort of 25 to 30,000 at a minimum level before we started to go too much deeper into other key elements to determine, whether it is an investable suburb. So, population or numbers is one thing, but, what goes beyond that is several elements, and it's got to meet the criteria. Otherwise, the population means nothing. There's no activity, there's no growth drivers beyond that. Well, it doesn't cut the mustard for us.
Yeah, I think you can't be too prescriptive, too hard and fast with your criteria there, because there are always exceptions to any set of rules that you might make, and you might come to the conclusion, well, a really big population. The bigger the population, I guess, the more diverse the economy usually, but not always, because one of the biggest regional centres in Australia is the Gold Coast, but it's you wouldn't say that its economy is particularly diverse. It's probably one that's taking a hit more than most in the current circumstances because of its reliance on tourism, including overseas tourists.
Yeah, absolutely. And it's a matter of what money's going into that area. So that the number becomes really irrelevant, I suppose. It's about on a broader level, knowing what state, local, federal government money is going into that area to support infrastructure for growth.
We're getting a lot of questions about specific locations around the country, as we always do, and it's quite understandable. We might touch on some of them because I know that they're the ones that you would know about. Shepparton, that area, not far from where you lived in Echuca for quite a long time. That's one that's probably on your radar screen in some form or other.
Yeah, it is, and it's interesting. We completed a project in Mooroopna, just out of Shepparton, recently. So that's in the last 12 months. So we're very familiar with the area. we're doing a lot more research into that area. It hasn't come up as an investable suburb at this point in time on our radar, but we're quite aware of that area, if that makes sense, Terry.
Yeah, sure. How about, Steve's asking about Albury Wodonga. It's one that we at Hotspotting track a lot. It really interests us for all sorts of reasons. What do you think about that location?
Well, we love the area. You know, we're quite bullish on the area ourselves. My co-director Adam, he lives up in Yarrawonga, yeah, we're very familiar with the area. We've got some clients that we're looking and working with at the moment in and around, you know, that pocket.
Yeah.
But it's quite a specific pocket, I suppose, that we're targeting.
I think Albury Wodonga is one of the more interesting regional centres that I've visited in my research travels. And what really stood out for me is the big presence of big name companies, big Australian companies and big international companies. They often have a presence there because it's so strategically located, a place that's within a certain travel time of Canberra, Sydney and Melbourne, and for that reason it's a place that big companies like to be.
Yeah, as I said, we're very bullish on it. We like it. We think it's got good projections long term. It's a safe area. I think long term it's a secure spot. But once again, we've just got to make sure, keep getting back to the point, is that don't rush out to buy an Albury Wodonga, because that's what we're suggesting here. It's you know, really understanding the key components and drivers, because from one street to the next it can change quite quickly from a growth projection perspective.
Yeah. Now, Dean's asking about an interesting place in New South Wales, and I think it would be a good one to touch on, because we just talked recently about how important it was to have a population of a certain size. Now, Dean's asking about Parkes in New South Wales, and that's quite a small regional town. It certainly isn't one of those places we touched on that might have like 30,000 or 50,000 population. But nevertheless, it's a place that we're very interested in because of its place in the inland rail hub. In fact, it's very pivotal to that, as well as having, you know, the big radio telescope. So it's a transport hub. It's got some diversity to its economy. How do you feel about a place like that, which otherwise might not make your list?
It's a good question. I like it. I like to see other people. I like to see other industry professionals such as yourself get passionate about an area before I get interested, if that makes sense. Because if I know you become interested in it, it gets me semi-excited enough to at least open up Google and find out a bit more about the area. You know, it's not an area. You know, Orange is another one, Terry. I think, you know, is quite interesting at the moment. It's definitely come onto our radar. Parkes not so at this point in time, but I know there's some positive, absolute positive indicators in that area for such as a small regional sort of area, and I can start to understand now a little bit more why you're getting excited about that. So, yeah.
Parkes interests us because it's a transport hub anyway, but it's going to be a much more important one when the the inland rail link from Melbourne right up to Brisbane is more advanced. Once that's completed, Parkes is going to be a very strategic and important smaller regional centre in Australia. It's also, as we said, it's got the radio telescope, and it's got an important place in history for that reason. A major agricultural community. It's a sort of economy that's probably not going to take too badly a hit from the current circumstances, because agriculture is strong and interstate transport continues to be strong. But you touched also, Mark, on Orange, and that's one that we are particularly interested in. And I was looking at it again in the light of the current circumstances. What are the elements of that economy, and what sort of a hit would it take from the current circumstances with the social isolation restrictions, etc.? It's got a major tourism industry, so that'll be affected, but it's also got a big government department sector, and that's unaffected primarily. It's got a big health sector with a new hospital, and that's very important in the current circumstances. Manufacturing is strong. Agriculture and viticulture, they're two sectors that are strong at the moment because supermarkets are thriving and so are bottle shops. So the industries that support those should do quite well in these circumstances, and it's also got the Cardia gold mine, which is undergoing an $800 million expansion, which as far as I know is unaffected by the current circumstances. So it's the sort of place that can weather the current storm pretty well and come out the other side strong.
Yeah, I agree with you. I think the agriculture and the gold mine is a massive sort of tick from our perspective as industry. So look, yeah, we're quite bullish on the area. We haven't dug deep enough yet to warrant it being the approved location, but it's come onto our investable suburb list for further research.
Okay.
So,
All right. Do you venture out to somewhere like Toowoomba in Queensland, west of Brisbane?
Interesting. We've sort of Ipswich area, yes. We're quite active in that area, and I'll talk you through one of the transactions we've just closed, actually. But Toowoomba, I've had a lot more contact. It's sort of that next element to where we will go, I think, because we're starting to get a lot of opportunity. We're semi-bullish on the area at the moment. Once again, it's an investable location. It's not yet on the approved list for us. But, I'm starting to see, I'm building really good relationships with key agents in that area, Terry. So we're getting access to a multitude of off-market opportunities in and around that area. The other day I had one that was, market value was around that 285 level, could have picked it up around that sort of 240 level, distressed estate, so off-market. We could have potentially closed that deal sooner for less money than that. It just depends. We've got to capitalise on the opportunities. We can't solve everyone's problems, and that's what being in the position of, I always use the term weed your garden. So what I mean by that is get rid of everything else that's sucking the life out of everything good that's there, and get rid of it. So really understand what you've got in your own garden, really nurture it. So get yourself to a position where you understand what your capacity is to take action and capitalise on these types of opportunities. But getting back to your Toowoomba point, I think, it's an area on our radar. Yeah, for sure.
Okay. And Howard, who asked that question, mentions the second range crossing, the Grand Central Shopping Centre, and it will be majorly impacted by the Inland Rail Link when it's completed. You might also touched on, Howard, the new airport, which has given Toowoomba connections to major cities of Australia that didn't previously have. We've talked in detail about Warrnambool, Mark. If you go a little bit further west across the border into South Australia, you come to a major regional city called Mount Gambier. Is that one that you have taken any interest in?
Not at this point, Terry. There are other areas, and we've got a lot sort of on that sub list of where we're not active just yet, but and Mount Gambier falls within that. Other areas of Adelaide, South Australia, absolutely. So there's some suburbs there that we can actively talk about, but Mount Gambier on that cusp. Yeah, once again, so it's almost ticked every box, but it's not quite there just yet. Yeah,
interesting processes that you go through. Locations really have to earn their place on your list.
Well, it is. It's the way we look at it, and it doesn't matter what you're doing. We look at the statistic, and it's 70% of all investments fail. So why is that the case? And what I look at is people are quite emotional about the purchase they make, whether they're buying stock or they're buying property. And if we don't have the data and statistic and the facts behind us to lead us to a destination and be equipped with the information, how are we making the best informed decision to acquire a property that is going to grow in value and actually meet our investment plan?
Okay. Look, I'd just like to pause for a moment. Thank everyone for their questions. We've got a lot of people tuned in today, and it's great to see. And thank you for your questions. We'll get back to some of those questions about specific locations in a moment. But I just want to touch on, Mark, one of the more general talking points that we thought we should discuss today, and that's the point about what signs indicate that you've missed the best time to buy in a location, that it's a good location, but it's actually past the point in the cycle where you probably missed the best time to buy.
Yeah, the key indicator for us is when the agents are ringing us looking to offload stock versus not hearing from agents. And once the phone stops ringing in a certain location, I start to realise that potentially there's too much heat in that market. So
Yeah.
we just retrace from those marketplaces. Doesn't mean to say they're not in good investable and approved locations long term. It just means that we've got to time the market. So once that heat comes back out, as we're seeing right now, we're starting to re-enter quite a few marketplaces where the buyers are sitting on their hands. They're waiting for the green light to reappear to start living life again. And what we're going to see, I feel, is the herd just will return at once. And what's going to happen, we'll possibly have low stock levels. So that's going to drive competition for opportunity. So, we're just... I think getting back to the question, when the phone stops ringing, that's when I know that there's too much heat in the marketplace. And the more I have to chase, the more I realise, well, hang on, I'm lower down the pecking order now. So, that's a general indicator for me.
Yeah. And one of the people out there watching at the moment has asked about a location that may fit the topic we're currently discussing, is asking, has Ballarat had its time in the sun? Has it passed its peak?
Yeah, we like Ballarat. I think, and we've got an active project in Geelong as another regional area at the moment. But, the Geelong Ballarat Bendigo story is quite profound for me. I'm a Bendigo born and bred boy, and I really love the area and quite passionate about it, know it intrinsically, and it is an approved location of ours, but there's certain pockets that we definitely don't go. And, it seems to be a hot market at the moment. And getting back to Ballarat, I think it's been a hot market for some time. I'd say the last 5 years it's been quite elevated in terms of the activity and price-driven sort of demand. And that's been driven a lot out of Melbourne. A lot of Melbourne and interstate investors have been led into Ballarat. A lot of period homes, close access, fast rail talk linking to Melbourne, all these future projects. But it's a beautiful city, once again, supported by several key industries, not just tourism.
Yeah, and you touched on Bendigo, and it's one that I'm personally very interested in, one that features prominently in some of our hotspots reports at the moment, is a market that's perhaps a little bit further back in the cycle than Ballarat. Do you see it that way? That's certainly the way I thought about it. I actually, in my personal investing, had to make a choice between the two, and I felt that Bendigo had more upside because it was a little bit further back in the cycle, but otherwise very, very similar qualities between the two cities.
Very similar, almost identical. So the way I look at that is, it is further back in the cycle. There was a lot of activity there in the last sort of 2 years that sort of hasn't really ceased at this point in time. From what I can see, there's still a hell of a lot of activity in that area and a lot of off-market stock. I've got a lot of colleagues and associates that are agents in that area, and they're still seeing high demand even in this marketplace where other areas aren't. So it's a lot of owner occupiers looking for homes, relocating for employment or lifestyle, and but from an investor perspective, that's what really entices me into the area. Buying the right opportunity is paramount. And it's spent 600 and something million on the hospital there in Bendigo. Beautiful area, arts precinct, Alambara Theatre, Rosalind Park through there. It's just so many elements going for it, and we can get our hands on stock, sub 350, sometimes even sub 300 with those value add type strategies, I suppose. Yields not necessarily. Yields are good, don't get me wrong. You're up around that 5 to 5.5%. What we're sort of seeing at the moment is we're buying in other areas in and around that Ipswich region, 6.2 to 6.92, gross yields that we purchased, over the weekend for a client. It's fantastic. But Ballarat, Bendigo, very, very similar.
Yeah. You just touched on Ipswich, and Lara's asking, what about regional areas in Queensland? We haven't talked much about Queensland so far. What do you like north of the border, north of the New South Wales border?
Yeah, I love in and around the Ipswich area. Now, I know I've been there a few times, and I know the temperature there is very, very warm. Because I went there in winter, and being a redhead, it sort of didn't, wasn't conducive to my skin tone. But such a warm area inland there, Terry. But the way I look at it, in the next 15 years, the projection for population growth is to double. So I think there's about 220 odd thousand people in Ipswich at the moment, projected to grow in the next 15 years to just under 500,000. And there's sort of talking at the moment about it being engulfed in sort of like that bigger Brisbane. So Brisbane will go from a 2 to $3 million population in that period of time. So it's, we've got to have an area for people to go, and the infrastructure spend in and around that zone is quite profound at the moment. And that's, what's leading us to great opportunities with still fantastic yields. Like, this is a key suburb we've identified at 6.92% yield. The property was under offer 3 weeks ago at 312,000. 3 weeks later, we've been able to seize an opportunity at 278,000. Now that's getting $370 a week in rental income. So you do your numbers on that. And the projections for that suburb are over 7% year one growth.
Yeah. I think Ipswich is a very underrated market. It's the most affordable part of the Brisbane metropolitan area. Great rental yields, as you've touched on. But I think the big factor for me about Ipswich City is there's so many really major jobs nodes out there, because research show people want to, what dictates the choice of location for a home buyer. And very often it's being able to buy affordably, close to where they work, and major jobs nodes in the Ipswich area, including those being created in major master planned long-term communities like Springfield, which has got a university campus, a big private hospital, big commercial precinct as well. So that's another factor very much, I think, in favour of Ipswich, is the availability of lots of jobs out there.
Yeah, absolutely. And the vacancy too there, Terry, I'll touch on, around that sort of 0.8%, sort of high demand, high population, into that area, huge influx.
Okay, we're getting lots of questions about various locations along, the coast of New South Wales, north of Sydney. And one that I know that you have a particular interest in is the Ballina area, Mark. Tell us a little bit about what you find. Why does that make your list that ticks all the criteria and is on your investable list?
Yeah, it's an interesting one, this one. It's not like we're super active just yet, but it's really piqued our interest, I suppose, more so from the perspective that everyone's aware of Byron Bay. Everyone, and you look at the median house price in Byron Bay, it's about $1.3 million. We're talking about a similar sea change lifestyle sort of environment, and we're talking about a $570,000 median house price. So it's way more affordable with those similar luxuries. A lot of development going on in the area as well. As far down as Wollongbar, there's huge development proposal down that far. So the TAFE, $7 million on the TAFE in Byron. So Ballina High School, great precinct, $50 million injection into that. The airport see major upgrades. So there's just $3 billion worth of development stimulated the local economy.
And benefits greatly, one of those locations that benefits from the ongoing upgrades to the Pacific Highway, which is a long-term $5 billion project. And I think Ballina is one of those places that specifically gets a lot of benefit from that.
Yeah, for sure. Yeah, and that should be completed, from my understanding, this year sometime, Terry, or into 2021.
Yeah. And it's been identified as one of the fastest growing regional locations in New South Wales for a number of years. Diversity in the economy as well. I mean, obviously tourism is a big factor, but there's also agriculture, education, construction, in the broader region, agriculture and fisheries, quite a big government administration employment there as well. And we come back to vacancies, 1.4% at the current moment. So it's a market that also can absorb some increase in rentals in the market and still be a very solid performer.
Yeah, and the other thing we look at there too is over 40% of the homes that are owned there by owner-occupiers are owned outright. So you look at that, and you look at the demographic of an area, it really is that sort of lifestyle downsizer type, I suppose, client that's looking to settle and, live that lifestyle.
Yeah. While I was asking a question that a number of people who are watching today is asking, and it's generally about the Newcastle and the Hunter Valley area. What kind of interest do you take in that market at the moment?
Not a lot at the moment, Terry. To be brutally honest with you, we haven't been active in that area. We know that Newcastle's been quite a dynamic economy for some time over the last sort of 5 to 8 years. It's not something that we are actively in at the moment for any of our clients. It's sitting there. It just isn't active for us at the moment.
Okay.
No specific reason other than there's other more investable locations that we're finding for clients.
Yeah, and there's certainly no shortage of them around Australia. Mike, let's touch on a point that's a trend that is already underway, but I think you and I think that it's going to become even more so as a result of the current virus crisis. And that's the trend towards people working more from home, which has driven an increase in interest in people buying in lifestyle locations, perhaps 1 to 2 hours from the capital city. We've seen that in regional Victoria. We've also seen it in New South Wales. But I think that there's a very good chance that the current situation, which is forcing people to work from home, whether they want to or not, is going to actually exacerbate that trend. What do you think?
I think technology. Look at us today, Terry. There's how many meetings now are we conducting on Zoom on a regular basis? I've got anywhere between four to 8 Zoom calls daily, and that's really taken precedence now in this particular time. And I think what we're doing is being able to adapt as an economy or as a workplace to be able to support our employees in remote locations to still get the job done. Now, it's not sustainable for a lot of businesses. I totally understand that, but I think what it will open up for is the possibility for people to decide to live that more regional type lifestyle and be accessible to the city. It may be on it could be 2 or 3 days a week or 1 day a week. It may not even be that, but I think it's really starting to open up an avenue as to what possibilities there could be as the new normal out the other side of all this. So we're adapting quite quickly to still run business, and I think that's the real power of what it is that we've been able to use through the technology that we have right now.
Yeah, and it's interesting that the media focus, being the negative creatures that they are, is very much on the jobs being lost, but not so much focus on the ones being created. And there are certain sectors out there that are actually thriving and booming and actually hiring new people because they need to, because of the demand in the current circumstances. And technology, such as the technology we're using to communicate today, is one of those factors, and it has implications for real estate markets.
Yeah, for sure. It's there's so many new platforms. Like, most people wouldn't have heard about Zoom. Now they know what Zoom's all about, or Facebook Lives and these sorts of things. So people are being forced outside their comfort zone to use technology, which I think really expands and challenges you to grow.
Yeah. Okay, let's look at a few more of the locations that people are asking about. Asif is asking about some location down on the Mornington Peninsula, Rosebud, Blairgowrie, Rye. Do you venture down there at all, Mark?
Been down there quite a few times for holidays, Terry, but in terms of investing for clients, no. It's not an area for us. I suppose it's not on our list, no. Yeah.
Okay. A more general question from Nick. How do you identify off-market opportunities? I think probably in the current circumstances, we're going to be seeing a lot more of that.
Yeah, the phone, I think there's been 4 missed calls on phones on silent, but, from agents. And I think it all comes down to, Nick, really, building the relationships with the agent. But, what we're finding is that agents are wanting to do business with credible sources and professionals because they want to be treated like professionals themselves. And what they're finding is a lot of contracts are falling over with finance and different clauses, etc. And, when you're positioning yourself with a professional by your side, it really enhances the possibility of that contract being executed. And that's the quickest way for the sales agent to be paid, and a good experience for their vendor. So, they're really, we're the first port of call for those off-market opportunities. It's not, you hear the word off-market, doesn't necessarily mean to say that you get a bargain. It just means it puts you in the position where you have the first right to negotiate if it meets your criteria. So, and if it doesn't meet the criteria, well, more than likely it will go to market if it hasn't met the vendor's expectations.
Sure. Mark, Tobias is asking a question or urging you to talk about a particular issue, and I know you've touched on it earlier. He's saying, can you talk about leveraging equity and hanging on to my cash during this time?
Yeah, that's a great point. I think, we talk to a lot of clients who are really equity strong, and we ask them why they want to get away from, doing what they're doing in terms of their job and these sorts of things to provide that passive form of income. And I think equity is the biggest untapped asset within an asset, so to speak. If people understood the fact that what they have within the equity of their own home, given that they have the capacity to borrow the money for as little as $50,000, as we alluded to earlier, Terry, you can buy those income producing assets that are going to grow in value over time. So it's extremely low risk. And all you're doing is leveraging the equity in your home, not using any cash that might be set aside as well for that rainy day. The power of equity is unbelievable. But people just don't, like, it was an interesting statistic someone sent me the other day. 48% of people don't even know what equity is. So it really blew my mind. And it was quite interesting. And I sort of thought, well, did a video and thought, well, if your house is valued at $500,000 and you've got $200,000 debt to a mortgagee, you've got $300,000 worth of equity. Doesn't mean to say the banks are going to let you use all that. They will let you use a component of that up to generally about 80% of the value of the asset. So there might be 200,000 in there that you can actually leverage or use. And it's just interesting. So it's really educating people, isn't it, Terry, on finding, it's not just providing them with the data and statistics and saying, go and sort it out yourself. It's about, well, how do we empower people to be in a position where they can control their own destiny? And without that, I think, you basically become what we call as a guess fester. You've got a little bit of information, you try and execute, and you don't know whether you've done it right. It's the way we look at it anyway. We just love to empower people.
Look, I think there's way too many people. My daily communication with people out there who are investors, who want to be investors, what I know to be true is that most of them don't have a plan or a strategy. They're just blundering around out there in the dark. And I always say to them, look, you've got to be prepared to get some expert advice on board. Be willing to spend some money on good advice and good information, because otherwise you're just going to go out there and make bad choices. Is that what you find out there in the marketplace? Yeah,
I do. And what I'm finding as well is that people are really apprehensive to ask for that help. Because sometimes when you go through the value proposition, one of the limiting beliefs we can have is, well, people don't want to pay fees for service. Well, you show people what they don't know, and the value is within that. It becomes a non-negotiable. It doesn't become an issue because they can start to see it for themselves. It's just that you've got to show them. And, that's part of that empowerment process of, okay, this is where we're at right now. This is the canvas that we exist upon. How do we build and script the right canvas that suits us for our goals and objectives long term? That's the key piece that we help construct, and that's what really gives us the satisfaction to not just help construct that, but get people to see it and believe it and formulate that and believe that it's theirs. That's the key empowerment.
Yeah. Mark, we're coming up almost to the hour, so we're getting to that point where we've got to think about sort of wrapping things up, and we've got a lot more questions. It's great to see so many people engaged today. I'm sorry for those that we haven't quite got to your questions today, but you can always follow up by making contact with Mark and other members of his team if you'd like to continue the conversation. I'd like to perhaps as one of the final points we could touch on, something that's very relevant to the times we're in, because this whole discussion is happening with the background of the virus crisis and the impact on the economy. A very interesting point that you and I touched on when we were discussing this event earlier in the week, and that is that because we're restricted in our movements, because we can't go out to restaurants and pubs and clubs, we're actually in a period of enforced saving. And I'm imagining that it's going to be quite an eye-opener for a lot of people, particularly young people, still have their jobs, still earning money, but finding they're saving heaps because they actually can't go and do the things they would normally do. And that could be actually a clue to the way forward for some people who want to get into property investment.
Yeah, I think it's a perfect point you raised, because we're not good at saving, and, forced savings is something we're not comfortable with either. So it's a matter of, well, what do I do with it? And do I put it in the bank? Do I go and spend it when the green light appears to live my life again? Or what do I actually do? I think this is a pertinent time for everybody to stop and reflect upon their current situation and how they've lived their life. But more so, how to shift to what do they want their life to become moving forward, and how do they choose to live that? And I think setting yourself up on a financial level for these times to, once it returns, whether it's a virus or whether it's another pandemic in the future, you're fully equipped to be able to handle the situation regardless of the outcome. You're in that position.
Yeah. I think it's one of those unsung benefits that is going to come out of these really strange and difficult times that we're in, that it'll be an eye-opener for some people. It actually has been for me with my own personal finances, realising that I've got more money left over at the end of the month than I normally do, because I can't go out and do the things I normally do. And it's I think for some people, providing a clue, well, if we moderate our behaviour, perhaps spend a little bit less on entertainment and on restaurants, that we might be able to get together some of our investment ambitions a little bit easier. One of the final talking points we had on the list today, and it's probably a good place to end on, Mark, is how do we think markets are going to fare in the second half of 2020? I guess it's the $1 million question for a lot of people at the moment.
Yeah, it's a fantastic question. We get asked this every day, and I'm not a skeptic. I like to make projections. But I think from what I can see right now is that we're in a buying window, Terry, and I think we've just entered that buying window, and I'm not too sure how long it's going to go for. I'm predicting that it could last for anywhere between 6 to 8 weeks. That's my projection only. But what we're seeing, I don't think this is going to reappear again unless there's another major pandemic that's outside of our control. But I don't think it'll return for another decade, because what I think, there's going to be a lot of money that's shifting now, but also shift outside of the stock market into a more secure asset class, such as property. Now, I think with interest rates being as cheap as they are, money's never been so cheap. So to shift that into the property market, to be able to grow your wealth, I think this window now that's why I sort of allude back to the weed your garden. Get prepared. Doesn't mean to say you have to do anything you don't want to do. It's just know what you know and get support to understand that capacity to borrow money if you are serious about investing in property. Because if you can leave your job with a passive form of income into retirement and accumulate these assets that are going to get you there sooner, it's worth the conversation from my perspective. It depends on how important it is to you. Yeah.
I think the most important word for people to keep top of mind in the current situation is the word opportunity. I think this is a time of great opportunity for all sorts of people, but in particular property investors, because most investors will be intimidated and will retreat. The herd will retreat, but the people who are able to think and act independently will be able to take advantage of great opportunity during this period.
I totally agree with you. We had 6 calls this week, with prospects, and they're ready to take action because they're the informed investors that are seeing through the mist, they're seeing out the other side, and they know with potential lower stock levels and more competition coming into the marketplace, they don't want to be playing that game. They wanting to be capitalising, as you alluded to, on opportunity now and into the next few weeks before we start to see more positive signs and restrictions being lifted, etc. So yeah, they're positioning themselves now, which is, I think, the best time to be taking action.
That's a great point for us to end on today, Mark. I just want to give you the opportunity to tell people before we wrap up today, if they're interested in having a further conversation with, following up, maybe talking about some of the services that Over and Above provides, what should they do?
Yeah, so look, we've set up a private Facebook group, Terry. It's called the Australian Property Investing Hub. It's an approved only group, so it's quite private and exclusive. We want to make sure that we've got the right people in there that are providing the right value, because we're going to give a huge amount of value. If people don't want to join Facebook or aren't on Facebook, we encourage them to reach out to us. They can send us an email at admin@overandabove.com.au. There's some information that we can then share further, you can book in a private consultation, no obligation, free, where we can start to dissect your personal circumstances with where you're at based on your experiences and knowledge to help, you know, redraft and recraft your canvas as to what you're looking to achieve from property investing. So just the invitation's out there. We want to work with action takers. You know, the procrastinators will sit there and they'll do nothing, and that's okay. But, you know, the action takers now, they're the ones that are going to be the ones that see through this long term and set themselves up financially for the future.
Yeah. And that, Mark, is the perfect point on which to end this particular webinar broadcast. Thank you, everyone out there, for your participation. We've had a great audience today and we've had great engagement. We've answered a lot of questions. We haven't got to all of them. I do urge you, if you'd like to follow up and continue to ask your questions and to engage with Mark and those colleagues at Over and Above, please do so. And thank you, Mark Heritage from Over and Above, for your contribution today. It's been a great conversation. I've enjoyed it. I've learned things. I'm always learning. But I don't think there's a topic in residential property that I enjoy more than talking about regional Australia, because, as I said at the beginning, it's the unheralded hero of the Australian property market. We should be talking about it a lot more than we do.
Great. I want to thank you and acknowledge your team too, Terry, for the opportunity. So thanks so much for your time.
You're welcome, Mark. And thank you once again, everybody, for your participation and for your questions. And you can feel free to also contact me if you want to continue the conversation at ryder@hotspotting.com.au. Thanks, everyone. That's it. Bye for now.
Thanks.